Thank you very much for signing up for our Product Cost Controlling in SAP course. I'm very excited to teach you how costing and controlling in general works in SAP. Costing is often viewed as a complicated topic, and the area is a common source of confusion among SAP users. But in my opinion, costing is in fact quite simple and considerably easier than many other topics in SAP. What makes cost controlling seem complex is the wide variety of costing-related terms and the vast amount of configuration that allows you to fine-tune every single detail of how costs are managed in the system. But all that is needed for a good basic understanding of product costing in SAP is one simple but comprehensive example how costs are controlled in the system. This is what this course is trying to deliver: a simplified example of a realistic costing scenario that covers all the most important aspects of product costing. We will not go through every single costing-related configuration and all possible options how you can maintain costing in SAP. I believe it is more efficient to offer you one end-to-end scenario that demonstrates how the different controlling submodules are linked with each other and how the costs are flowing inside the system. Once you understand how one complete costing scenario is set up, it is easy for you to start expanding your knowledge and become an expert of the topic. The structure of this course is the following. We will first start with a short slide set that introduces our costing scenario that is based on a real-life company. The slide deck also introduces the most fundamental terms and concepts related to product costing. I know that I've made a big fuss about explaining costing through a real example in the system and not through slides, but please bear with me. We will not use too much time going through the slides, and we will be playing around in the system before you know it. After we have finished our short theory session, we will start looking at how costs are planned in the system. Cost planning is essential for the creation of material costs estimates that decide how goods are valued in financial postings and in a company's balance sheet. Cost planning also gives us information that can be used for managerial decision-making and allows us to compare actual costs to cost estimates. The final part of the course is about actual costs. We will go through what happens in costing during actual manufacturing processes, and we'll see how cost controlling is linked with production planning and financial accounting. I can guarantee that by the end of this course, you will have a crystal clear understanding of the most important costing-related concepts and will be ready to implement realistic costing scenarios in SAP. And now, let's step into the world of product cost controlling. During this introduction session, we will quickly go through all the most important costing-related elements and terms. I will also introduce our example costing scenario that we will be using throughout the whole course. I know watching slides is boring, and you would rather be doing things in the system, but I promise you that after these slides, you will understand the connections between different costing elements better than many seasoned SAP consultants. First, let's take a quick look at costing from the system module perspective. As you know, SAP consists of various functional modules that are further divided into submodules. Product Cost Controlling submodule is part of the SAP's Controlling main module. Product costing is closely connected with cost element accounting, cost center accounting, and activity-based accounting, and product costing can't be discussed without also discussing these three modules. In this course, we will not discuss profitability analysis, for which we have a dedicated course. Controlling is closely associated with financial accounting and production planning modules. When we discuss about the actual cost during the last part of this course, we will see how all these modules are working together. So why do we have this submodule related to product costing? Product costing is needed for both external accounting and internal planning and decision-making reasons. From the external perspective, product costing is needed to define how our stocks are valuated in our balance sheet and in financial postings. From the internal planning perspective, product costing helps us to understand how much does it actually cost to manufacture our products. Product costing allows us to compare the planned or budgeted cost to the actual production costs and helps us to make various manufacturing and pricing-related decisions. So let's step into the world of wood pulp. Our example company is a pulp mill in Germany that produces 500,000 tons of wood pulp per year. Wood pulp, also known as paper pulp, is a raw material that is used to produce a variety of paper and paperboard products, including magazine paper, toilet paper, diapers, folding cartons, and so on. Pulp is manufactured by either mechanically, or in our case chemically, separating fibers out of wood. Pulp is not very famous as a raw material, despite the fact that we are all using countless pulp-based products every single day in our everyday life. In this course, we will examine costing in SAP using pulp as our example. Pulp is a great example of process manufacturing and is an excellent material to use to explain the basics of product costing. So, how to make wood pulp? The most important raw material for pulp is chopped wood. Together with various chemicals, the wood is first cooked, then bleached, and finally pressed and packaged into neat bales that can be shipped anywhere in the world. Based on the type of wood chips and the types of chemicals used, different varieties of pulp can be produced. But we will not only get pulp out of this manufacturing process, we will also get something called black liquor as a byproduct. Black liquor is an extremely useful byproduct that can be used to produce electricity. Depending how efficient a pulp mill is to recover black liquor, a mill can produce much more electricity than it is using. This is something that is very relevant from costing perspective and something that will be discussed a lot later. The required raw materials are maintained in the system using a bill of materials. The bill of materials lists the raw materials and their quantities needed to produce a certain material. In our case, a certain variety of wood pulp. The manufacturing operations are maintained using a routing. A routing lists all the operations that are needed to convert raw materials into specific finished products. For process industries like pulp manufacturing, we are maintaining something called a master recipe instead of a routing. Recipes and routings are pretty much the same thing, but a master recipe includes additional functionalities especially designed for process industries. It is also very important to remember that there does not need to be only a single BOM or a single routing for a certain finished material, but multiple different versions can be maintained. It is common that a certain finished material can be produced using multiple different production methods. If we are using a BOM and a routing to calculate product costs, in SAP terminology we are doing costing with a quantity structure. It is also possible to do costing in SAP without BOMs and routings and enter all cost estimates manually into the system. In this course, our focus will be on the quantity structure method. The most important costing-related decisions happen outside of the system. Before we can do anything costing-related in SAP, we need to have a look where our company is spending its money, what kind of costs our business is facing, and how the costs are monitored and recorded. If we have a clear picture of the costs of our company and a well-defined production planning process, managing costs in SAP will be easy. Our example company has identified these costs as relevant for product costing. All the costs in the slide are actual general ledger expense accounts. It depends on the company how comprehensively the company wants to include different costs for their product costing. It usually does not make sense to include every single expense account for costing, as this can make the costing model very cumbersome to maintain and update. Costing is also always a somewhat political decision. Different people in the organization have different reasons to wish that the cost of goods manufactured would include as much or as little cost as possible. Setting up a costing model takes a lot of balancing between different opinions. A standard price, or the balance sheet valuation price of a product, is based on direct cost and manufacturing overhead costs. Indirect overhead should not be part of the standard price of a product. However, indirect overhead costs are important when we are evaluating the overall profitability of a company, and indirect overhead is an important component for profitability analysis. As mentioned before, this course will not discuss the profitability analysis in SAP, as there is a dedicated course for it. So the question is, how to divide all these costs for the different types of finished goods a company is manufacturing. This is what we will start looking at next. To assign different types of costs to different finished products, something called cost centers are used. Cost centers are master data elements used to collect and distribute costs. When costs are planned, a cost center distributes costs to a product. For actual costs, a cost center distributes costs to a manufacturing order. So cost centers collect both planned costs and actual costs, and planned and actual can be compared on a cost center level. Cost centers are the lowest departmental levels for which the costs are assigned. It is up to every company to decide how deep they want to go in their cost center creation. In our example company, every individual machine in the production line has been created as its own cost center. Also, overhead cost centers have been created for costs that can't be directly attached to a single machine. A cost center is a little bit like a GL account because it also has debit and credit sides. It is important that at the end of a period, debit equals credit, meaning that a cost center has given away exactly the same amount of costs as it has collected during the period. Now let's look at the cost centers of our example company at a more detailed level. It is possible to post costs to a cost center directly or through other cost centers. With our example company, depreciation expenses are something that we can allocate directly to a specific cost center. The machines used in a pulp mill are very expensive and depreciations are machine specific. All the other expenses are allocated through overhead cost centers. Let's first look at the energy cost center. The energy cost center collects costs related to electricity costs. All the planned or actual energy costs are posted to the left or debit side of the cost center. The energy costs are then allocated for the actual pulp manufacturing machines based on how much energy the machines will be using. The more electricity a machine is consuming, the larger portion of the cost it should absorb. The cost center collects the cost to a debit side and then distributes the cost from the credit side. It is important that the cost center gives away the same amount of cost that it collected during the period so that the debit side equals the credit side. So, how can we control how much energy expenses should be allocated to each machine cost center? For this, we can utilize statistical key figures. When we are planning energy costs, we can maintain a statistical key figure for the cooking machine cost center, which says that we are estimating the cooking machine consumes 10 million kilowatt hours of electricity per month. Then we can maintain key figures for bleaching machines and baling machines, saying that both of the machines will use 5 million kilowatt hours per month. Using these key figures, the system will then calculate that cooking machines should absorb 50% of all electricity costs, and bleaching and baling machines should absorb 25% of the costs. Next, let's look at the direct wages. Quite often, there are dedicated shop floor workers always working with a single machine. For these workers, we could allocate costs directly to a certain machine cost center. However, with our example company, one shop floor worker can work with multiple machines, which makes allocating direct wages more difficult. That is why an overhead cost center is used for direct wages. As you can see, with energy and direct wages, the same account is used to collect and allocate costs. However, with the maintenance and management cost center, things are a little bit different. The cost center collects costs from 3 different accounts, but on the right side you can also see only one box. In this cost center, the accounts collecting the costs are combined into a single box that is called a secondary cost element. This secondary cost element, M&M costs, is used to allocate all the costs collected by this cost center. When costs are allocated to other cost centers using this kind of secondary cost element, this is called assessment in SAP terminology. When a single account is used, like with energy and direct wages, this is called distribution. This separation is important to understand because there are different transactions for allocating assessments and distributions. So now we have collected all the direct and overhead costs for our manufacturing machine cost centers. To give away these collected costs, a secondary cost element is created that is used in the credit side of all the manufacturing cost centers. Note that there is no need to create a different secondary cost element for all the machines, as the cost centers can use the same secondary cost element. This cost element, called operation costs, include all the costs on the left side of a manufacturing cost center and can be used to allocate costs to a product or to a manufacturing order. In our example, there is only one cost element on the credit side of the manufacturing cost center, but this doesn't always need to be the case, as there can also be multiple cost elements on the right side of a cost center. But now I'm sure that many of you are looking at the admin cost center on the right-hand corner. The admin expenses cost element has not been allocated to any of the machine cost centers. For admin costs, we will be using another allocation method, something called a costing sheet. A costing sheet is something that is easiest to understand when you actually see it in the system, so we will not discuss it more at the moment. For now, all you need to remember is that our example company has admin expenses that are not allocated to machine cost centers and will be allocated using an element called a costing sheet. During the previous slide, I was using the terms cost element and secondary cost element without properly defining them. A very crucial thing to understand is that with controlling module in SAP, you do not talk about general ledger accounts. You talk about cost elements. Cost elements look just like GL accounts, as they also have a debit and a credit side which are used for postings. But the fundamental difference is that GL accounts handle actual financial postings with real money. Cost elements only handle internal money that is used by the controlling module. When you post a transaction in SAP, separate documents are created for financial postings and for controlling postings. For the financial accounting module, GL accounts are used, and for controlling, cost elements are used. So during the previous slide, when I was using the term account, I was using the term wrongly. I should have only talked about cost elements as we were inside the controlling module. What makes it very easy to get mixed up with cost elements and GL accounts is that primary cost elements are directly linked with the actual GL accounts, and they have the same number and the same description. When you post something to a GL account, the same posting is copied to the corresponding primary cost element. A primary cost element is not automatically created when you create a GL account, but primary cost elements need to be created if you want to use a GL account for controlling purposes. Secondary cost elements are not linked with a specific GL account. They are used to move around and allocate internal controlling money. Let's look at our cooking machine cost center and see which of the cost elements are primary and which are secondary cost elements. The maintenance and management cost element is a secondary cost element, as it is a combination of all M&M costs. Operation cost is a secondary cost element, as it is a combination of all cooking machine-related costs. In the previous slides, we have discussed how overhead costs from overhead cost centers are allocated to manufacturing cost centers. But then what happens with all these costs collected by the manufacturing cost centers? In order to answer this question, we first need to introduce activity types. Activity types are cost drivers that are measured in units of time and quantity. Activity types collect costs from cost centers, and the credit side secondary cost elements are linked with them. Our example company is using only one activity type called machine hours. The idea is that the machine hours will include all costs that it takes to run a certain machine for a certain time, including overhead costs. The connection between cost centers and activity types works like this. First, you need to assign, or using SAP terminology, split the debit side cost elements to one or more activity type. In our example, the word split is a little bit odd as our example company uses only one activity type. But as just mentioned, there can be multiple different activity types, and the debit side costs can be split between them. An activity type needs to be linked with a credit side secondary cost element. This secondary cost element is the cost element used by the activity type. In our example company, all the machines are running 24/7, meaning that we can plan that the machine will run 720 hours per month. When we know the total cost running the machine and the hours that the machine will be running, we can calculate an hourly price for the machine. Now, when we know how much it costs to run the cooking machine for 1 hour, we need to know how much time we need to cook pulp type A. This information is maintained using a routing or a master recipe. In the recipe for pulp A, we have maintained that pulp A needs 1.7 hours of cooking. By multiplying machine hourly price with the time required, the system will calculate what are the manufacturing costs related to cooking for this material. The same activity price calculations need to be performed for all our manufacturing cost centers. I want to add one more important note related to the cost splitting. When we are planning costs in the system, it is possible to immediately attach certain costs to an activity type. This means that there is no need to do the splitting for these costs, as they already belong to an activity type. This is something we will discuss in detail when we start doing cost planning in the system. As a conclusion, here is a summary of the steps needed for planning costs in SAP. In our example, we were doing activity-independent planning as costs were assigned to activity types during cost splitting. If costs are directly assigned to a certain activity type, This is called activity-dependent planning. After completing all these steps, we are ready to run costing. A costing run is the process where the system is calculating the planned costs of a product. So all of our cost planning efforts will come to use in a costing run. It depends on the company how often the costing run should be executed. Some companies prefer to run costing every month, so the changes in raw material prices or operation prices will be reflected in the finished material prices. For some companies, it is enough to run costing at the beginning of every fiscal year. Every time when you run costing and update the standard price of your materials, the system will reevaluate the stocks of the materials. If you create a new cost estimate every month, you will have a lot of financial postings related to stock revaluation. Before we can start cost planning, we need to make sure that all required master data has been maintained. All the most important costing-related master data elements have been summarized here. We will start the next part of our course by going through all these elements in the system. We have now finally completed the theory and introduction section of our product cost controlling course. I want to thank you for your attention and patience so far. I know how tiresome it can be just to look at slides and listen, but from now on things will get much more interesting as we will actually start playing around in the system. But in order to be fully honest with you, there will be a few more slides coming up later, but I promise you that 95% of our time will be spent in the system. The next part of the course, we will be discussing about how costs are planned in the system. We will examine how costing-related master data is maintained in the system, how costs are planned for the manufacturing operations, and how a cost estimate is created for a product using a costing run.